Good afternoon and welcome to Jun and InterBolsa's weekly report for the week ending June 29th. Once again, for the third week in a row, it's been a shortened working week, just the 4 days, and likewise next week as we go into another long weekend. The coal cap has effectively been flat this week, or the volumes at $60 million plus a day actually been much better than expected, considering a lot of investors are probably away. The pace has been pretty weak. It's down 1.55%. It's probably down about 6% over the last 2 weeks. Causes are real difficult. It's detached from the real right now. Could be caused by Zuluaga's comments last Monday, saying that he expected the currency to close the year somewhere around 2,300, maybe above, which may have scared speculators out of the market. The test market, again, is staying very quiet. We've seen the steepening of the curve, which was reflected in the bi-weekly auction. We have the maturity on July the 10th of something like $2 billion of tests, so the market's watching that very carefully. And it's also keeping an eye out for, well, it was keeping an eye out for the GDP figure, which came out yesterday. And going forward, we'll be looking at the CPI data for June, which is out on July the 5th. Speaking of the GDP figure, that was the big number of the week yesterday, down 0.6% in the first quarter of 2009. Much better than the 1.3% drop expected, better than the 1% revised figure for the fourth quarter. Probably the biggest surprise was construction, was up 4.1% in the quarter. Good numbers overall in the GDP. We've seen a couple of analysts already come out and now expecting better things for the rest of the year. Finance Minister Zuluaga seems to think we're not in recession. He says because it's better than the last quarter, we're actually not in recession, but obviously technically we are, but you get where he's coming from. Things are improving pretty rapidly. As I say, we've been over the markets. Now in politics, we've had a couple of major events this week. The U Party, which is the very crux of the Uribist coalition, they had a big meeting on Tuesday, and they've come up with Plan A. Plan A is to drive ahead with Uribe in the referendum. And Plan B is if by September or October we're not getting anywhere with that, they're going to put forward their own alternative candidate. The usual names are around, which is Andres Felipe Arias, Juan Manuel Santos. Well, they're the two standout names in that group. One name they made absolutely clear won't be part of their coalition is Herman Vargas Lleras, who stood himself yesterday officially for the Radical Party. He was standing and declaring himself no longer part of the Uribe sect. He made it very clear that he admires everything Uribe's done. He won't change too much that he's done. I think it's very important for investors to realize that from 2010 to 2014, we're really not going to get any change in policy here, whoever takes over, unless something really radical happens between now and next May. In stock news, we issued a report on Rubiales this week, an initiation with a buy. We think it's a tight little company. We've got a pipeline which is going to bring all sorts of advantages when it's completed in October. They're good management. They're all out of PDVSA in Venezuela. So we think it's a good little company. Apart from that, the Financial Reform Act was finished in Congress. We just await Uribe to sign the act now. For the pension companies, probably the most important for them is the fact that they can now offer 3-tiered different products, which can be according to risk or according to age. So that'll help them and should attract more money into that sector. For the banking, it really was more about client protection, so really shouldn't affect the banks too much. And having spoken to the banks on the subject, it's pretty clear that they're not worried about anything in the Act. Finally, Fabricato, during a press interview this week, there was some misunderstanding. They actually said that 70% of Venezuelan, or exports to Venezuela have dropped 70% since the new FX measures came in Venezuela. Got misinterpreted by the local press. Stock took a big hammering on one day, but then was clarified that actually it's only 70% since the measures came in, not 70% year to date, so the stock's pretty much recovered. That really is it in terms of news. As I say, it's a long weekend. The next thing for us is July the 5th when we get the June CPI data. Not much before that, and that's it. Really a very good weekend for Medellin and wherever you are.